So you've heard the lady say this meeting is recorded. Welcome, everyone. And thank you for joining us here on Wednesday, January 12th. We've got a great guest. Trevor is with us. He is he's an all-around cool guy. Let's put it that way. I met him about 1.5 to 2 years ago. But just getting to know him over these last couple of years has been awesome. And he's going to talk to us about passive investing. Something I think that everybody on this call is looking into, do a little bit of, and this is going to be kind of a, like a coffee side chat. He doesn't have a presentation. We will open it up to questions. So if you have a question when we're talking, just put your hand up there and I'll unmute you and we'll join in. But we're just going to basically be talking. So we're going to be talking all about passive investing. If you read anything about Trevor, he spent, what do you say? You said 47 years in corporate America?
Yes. Yeah, I'm
47
old.
years. Okay. In different positions. And then he transitioned over to passive investing. And we'll talk more in detail how he did that and where'd he start? Where's he at now? I warn you that he is in Texas, so his weather's a little bit different than us in Michigan, whoever's in Michigan. So, yeah, he'll talk about the different investments he's in and how he chose them and stuff like that, and stuff like that. So what I'm going to do is I'm going to turn over for him to give him a little time to tell us a little bit more about himself. Then we'll begin.
So perfect. Thanks, Pat. Thanks for having me here. Thanks for those that are here that I've invited for supporting me. I appreciate that. So as Pat mentioned, I have kind of a unique career and a unique career path. You'll never find anybody with sort of as strange as background as me. So if you haven't heard, I'm originally from Niagara Falls, Canada. So if you hear me say out and about, it will give it away. And I started originally in my high school years at Ripley's, believe it or not. I always like to say believe it or not. So I worked there for 5 years all through high school. And then I moved over to Guinness World of Records and eventually got up and brought up through that company to where I was actually managing the rights for them in North America. So I was running one in the Empire State Building. And then I tried to open my own Guinness World of Records in Orlando, Florida. And that deal fell through, but I still wanted to emigrate to the US. And so I started and I opened a haunted house of all things in Orlando, Florida, year-round haunted house. And then I got recruited by a company originally called Skyventure. Now I fly indoor skydiving, and I did my past 20 years with them. The company grew quite a bit during that time. So I opened 46 of our 80 worldwide locations. Near the end, it was quite exotic: Queenstown, New Zealand; Brisbane, Australia; Perth, Sao Paulo, Brazil. So it was very exciting. And at our very first team meeting, the owner gave us all a copy of Rich Dad, Poor Dad. And I read that book, and I did what a whole bunch of other people did. I put it back on the shelf and went on living my life. A big mistake, absolutely big mistake. I read it, I understood it. I knew I should do something in real estate. I wasn't quite sure what, but I knew that there was a big world out there that I was missing. And then as we started moving along, what had happened was we went through a couple of ownerships. I wasn't as happy with the last ownership, but when they did buy the company, it provided me with some extra cash. And so I said, okay, this is now the time that I need to start looking at real estate. Not really quite knowing what I was going to do, so I even joined the Rich Dad, Poor Dad coaching program. Sadly, I didn't enjoy it. Went to a couple of other, I call them the credit card you can buy in office building seminars. Have anybody been to one of those where
been to a few of those? Yes.
And you just bring your credit card. In fact, you're going to take 3 credit cards to pay for our thing that we're going to call and see if we can get your limit raised. And then once you figure out how to pay those back, you're going to go buy an office building with them. Quite fanciful. Oddly, I saw people signing up. I did sign up with a local mentoring program. They were mostly single family focused, but they did have a commercial division. So I started training, and then I got hooked. Absolutely, positively hooked on real estate investing, understanding about it. And so I started passively investing quite quickly, and I just kept growing and growing and growing it. And now I've passively invested in 17 deals. 15 of them are active. Quite a bit of variety in the asset classes I invested in, because I wanted to, I call it earn and learn. So I wanted to do different types of asset classes. Majority is multifamily, but retail strip center, a medical center, 2 land deals, an apartment to condo, single family home fund, and I did my first storage investment not too long ago. So quite a bit of variety, and everything
Wow.
from deep value add to A+ properties to new build on the apartment side. So quite a bit of variety.
So now,
And
once I'd like to stop you real quick, so I apologize. So when you first started, did
yep.
you go into commercial or was it residential? So
No, so I didn't do any residential. So went straight
okay,
into commercial. Yes, I have
okay,
not. The only home single family is my house.
okay. So that's kind of a myth that I think everybody's out there. Oh, you got to start with single family. You got to do that. You didn't. You took a rich dad, went right into multis, or I should say commercial, right?
Yeah.
What was your first commercial purchase? What were, I should
Yeah,
say, your
so I was
investment?
a passive investor in a 176 door deep value add project in San Antonio.
Okay.
And that property, that whole thing, that the whole investment was what I'm going to consider my biggest educational thing that I learned. I learned a ton. I wanted to earn and learn. Well, boy, did I learn on that one. So what had happened, I never went to see it, which I should have. It was 2 hours from my house. I invested in it. We got a little bit of money, but then it became clear that they were struggling. They were having some problems, and I wasn't learning as much as I wanted to learn as a passive investor. So I went to the general partner and said, listen, I'm not learning. Is there anything I can help with? And so we had a meeting and agreed some terms. And basically what was going to happen, I was going to help his asset manager, who was overstretched. They had a bunch of problems, properties that were having some trouble. And I spent a week there, and the things I found out that I reported back up, that was the last week for that property manager, that asset manager, because he wasn't disclosing everything that was happening, at least at that property. And I'm assuming it came to light on others. Then they decided, well, we need somebody to blame, so let's fire the property management company, because they've got to be the ones that are doing everything wrong, and let's self-manage. So here I am, a volunteer asset manager, doing a deep value 176 door apartment complex that's ran out of CapEx money,
Uh-oh.
and trying to, renovate units, keep things going. And then of course, this lovely thing called COVID came along, and we were doing real well. But the property got hit really bad. Tenants stopped paying. We had quite a few skips. And the people that skipped did not leave their apartments in very good condition. So we were trying to get them up and running. And long, sad story. We ended up having some disagreements. And when an LP and a GP have disagreements, the LP does not win. So that was the end of me being a volunteer. And that property did finally sell. We all got our capital back, but no one made any money, unfortunately.
Well, at least you got your capital back, because I've heard of people where they don't get their capital back and they're tied up in lawsuits or whatever,
And the GP did personally take a loss. I know him well enough to know that he did that. He was honest when he talked about that. And they made sure, often what happens is they hold a little bit of money back till they settle out the bills, and then you get paid. But he paid everybody within 3 days of close, and then ended up settling himself. So, he at least in the exit, he took most all of the loss. No one else took a loss.
Well, that's good. That's good. So that first deal, so you read Rich Dad Poor Dad. How did you find this deal? How did you kind of vet it? Because I think everybody on this call, like, okay, what's my first step? What do I need to do? Do I need to go back and read Rich Dad Poor Dad? Or, yes, you probably should. But what would you do that first, second steps?
Yeah, so I had joined the mentorship program, and it was a deal that was brought through the mentorship program to the students and
Okay.
to call it a real estate club or whatever it is. And again, a lot of people in the group were single family, but a lot of them had, retirement funds that they wanted to passively invest, or had decided they would like to go the traditional route from single family to commercial, at least as a passive investor. So I invested in that deal, with through the group. And I'll be honest, I didn't know that much. I really didn't. And actually went back when we closed the deal and reread the PPM and said, I probably wouldn't have invested in this deal now, from what I know now. There were a lot of assumptions made that were just, I'm going to call them too good to be true. They clearly, from myself looking at deals and being involved in a lot more deals, they were undercapitalized in their capex. It was quite clear. This was a deep value add property. And so, but again, thank goodness I didn't lose money, and I got the education of a lifetime. I mean, I
Gotcha.
really did. I mean, when I used to come home from, my wife would say, how was your day? And I would say, I didn't call the police today. It was that kind of property. I didn't call the
But see,
police.
now what you know now, though, you can look back, right, and go, okay, wow, I should have never done this. But when
Yeah,
you're in the midst of that, you're wide-eyed.
yeah,
Thank gosh you didn't lose your money. But that's how you learn now when you're going out to look and deal. You have that, what they
that's
call
correct.
wisdom, right? That forethought we all look for. Luckily, you didn't lose money. I've done it both ways where I've lost money and not lost money, but you do come in with a little bit more, okay, I need to be looking here, looking there.
Yeah.
And that's good that so how long between that investment and your next one?
So I'd actually made one shortly thereafter with the same group, and I didn't make money on that one either. So my first two. So you're going to learn a lot from me of what not to do. Now, that one there was a very interesting. So that was right when property taxes in Texas started going really crazy, and then they basically got reassessed. So they got their property taxes reassessed substantially different, and their insurance substantially different, which are two things in Texas: property taxes, insurance, if you're not properly budgeted for it. So that particular property never made money, never lost money. And what happened was, it was just going along, and we'd gotten some small dividend payments, and there was a little bit of cash flow. And I'll be honest, they were very creative. So they turned a couple of the units into Airbnbs, which you're not really supposed to do. The lenders don't like to do it, but there's ways you can do things like that, to where, you sign it as a tenant, and then the tenant, so one of the partners was doing it that way. And they really tried to make it. And then what happened was an unsolicited offer that got a guy who needed a 1031 at the end of a year to get his money out. And that made everybody 100% whole. And, I think that the GP team, they made a little bit of money for all of their efforts. And they called a vote and said, listen, we're going nowhere fast. If we'd have known that the real estate market would have continued to grow like it is, with that crystal ball that no one has, it might have been a wise decision to hang on. But sometimes you're looking at it just going, we're spending a lot of energy, and we can all walk away, and everybody's made whole, and everything's okay. And in fact, we were able to make counter offers. So we actually even looked at buying it. A group of us looked at buying it, and then just decided, no, let's move on, and get going. Um,
Gotcha.
and it turned out to be pretty good, even though that property did all right, because that was the end of 19, and we all know what happened in 2020, in March of 2020. So we might have struggled a little bit even more.
Interesting. Jay, you have a question. Go ahead and unmute yourself and ask the question, please.
Yeah, I've got a couple. First,
Sure.
as an LP, how much of an actual influence did you have in the decision to sell or not?
So you really don't have any. So what they did was they tried to be gracious about it. So they had a call and they said, we are going to do this. If anybody strongly objects, please bring it up at this call or send an email. Actually, I think, sorry, I should back it up. They did a call and then they did a vote. And they never disclosed the results of the vote, but basically they worded it, you better have a really good reason why we shouldn't. And we'd like to. And so again, the group of us that were trying to buy it, we all kind of had a meeting and looked at the number. We would have had to match the number and we would have had to match the quick close because he wasn't going to drag it on, right? This was a quick close, all cash deal. And I don't blame him for not, you got something here and, you can close by the end of a tax year. And, we closed it closed like December 22nd. And,
wow.
And the offer came like November 1st.
Okay, got it. Second, can you guys talk about how you analyze these deals and what kind of metrics you're looking at when making your own decision to invest?
Yeah, definitely. So I have sort of over the time developed quite a bit of, sort of a theory on it. So the way I look at investing, I kind of look at it as it's a race or race. So the jockey is the most important person in the whole deal. So the jockey is the main syndicator. So I have spent a lot more time getting to know the syndicator, talking to people that are in their deals, because after the fact, right, you always meet somebody, oh yeah, I wouldn't have done that, or I would have done this. You try to find out. So you want to really understand who you're giving your money to. Then you want to look at the horse. So the horse is the asset class or whatever it is. And then you look at the track. The track is, where is it? So the one property that I talked about having all the troubles, to be honest, a year after I was an investor, when I went in to help out with the asset management, I kind of drove and am I okay to leave my car here? That was like, that was a good indication. Like, am I okay to leave my car here? Like, and another funny story. So we found this plumber that did great work, but he kept getting robbed every time he came to the property. So I actually would sit in a lawn chair by his van, and because the Wi-Fi still worked there, and do my phone calls and babysit his truck, so he would still come and fix my plumbing, because he was the most kind of funny story. But it was a nice shade tree there, so it was okay. Got a little, but it was. So again, understanding, all of those things, right? So who are you investing in? What type of asset class, and this was a deep value add, which is okay. Right? But you take deep value add, the unfortunate circumstance of COVID and a few other things, it's a little harder climb, but it's okay if you're funded all right. If you have the funding to get, because that's all deep value is, right? You're in this big storm, you're throwing money at fixing the problem by improving the property, turning the tenants, rebranding for the image. All of those types of things. So it's okay if you're funded enough. You can make a lot of money on those deals still. But I didn't understand all of those things as well as I do now.
Did you seek these investments, or were these brought to your attention?
So they were brought to my attention through the real estate group that I was in. So how that works with that group is, they kind of look at it, it gets kind of approved that it's an okay deal, and then it gets presented to the members of the real estate group, and then you have an option to be able to invest. And, and again, I want to make sure I'm clear, like they had some deals that did do very well, so anybody can have something that gets a little sideways. So, they had some deals before this that paid very, very well. And they're in a couple of now that are doing much, much, much better. So, sometimes it's just, you can get a little cocky in the middle, maybe as a sponsor or whatever. And again, it was just kind of a series of little things snowballed into a big problem.
Yeah. So I assume those previous deals that they'd done well on were, among other things, presented to you guys. What was that presentation like for you? What were those other things that they kind of brought up?
Yeah, so the presentations were the same. And again, I wasn't at the earlier deals that did well. They just used them as examples in the training of how they've done well investing. So a lot of their training is, this is how we research this deal. Here's the results of these deal, which is a lot of what training you get, right? And so I was looking at their deals and they were good deals. And then since then, they've had a couple of good deals. And I'm actually an investor in those and getting money. One of them is in the retail space. And, we closed March 15th, 2020 on a retail center.
You're a glutton for punishment,
I got some
aren't you,
good timing.
Trevor?
But I'll tell you, not huge, great results, but Q4 and all the quarters of 21, 5% cash on cash return. And all things considered, a retail center, and a little off topic here, but the main thing, buying a distressed kind of retail center is the same as an apartment complex, just a little different metrics. So you try to get better tenant base, just like in a proper thing. You try to fix the plaza up. And then the most important thing you try to do is put all the tenants on what's called a triple net lease. So triple net lease means, hey, tenants, you're responsible for anything that goes wrong here. We no longer are. And so what happened was, during COVID, they managed to get a lot of the tenants, they forgave the 3 months of COVID rent in exchange for a new lease, which was a triple net lease. And then the restaurant went bankrupt. And luckily there's some poor soul that still thinks their restaurant's going to succeed. And I think they're actually doing all right. And they came in and opened up their restaurant, and because the other one lost their business, they left a lot behind. And so we were able to seize that from past rent and things. So the new person could start with a kitchen in place, just needed to renovate, do a little upgrades to a new style. And then they were able to sign them on a triple net lease as well.
So it sounds like you understand what's going on to a certain degree on the day-to-day basis, but do they update you? I mean, are there like reports each month that's sent out?
It's only quarterly. I'll be honest, most of the deals report quarterly. I did invest in one deal. It was very interesting. At the very beginning, they reported weekly. I've never had a weekly, but I like it. They report now wasn't long. It wasn't long at all. And then they switched to bi-weekly, and now they've switched to monthly. We're almost in a year in now. So they switched to monthly updates. But at the very beginning, they did weekly updates. Again, they weren't long. They were just an email. And this was a property, again, completely different scenario. They bought this property from a builder. So what happens when builders buy the land, build a property, they do tons of lease concessions, tons of move-in specials, tons of things to do, get it up to about 80% occupied, and then sell it to somebody. And then the next person finish leasing it up, burn off all the concessions, try to get tenants to re-sign, and then you start chasing the add-on costs. They were charging a bit for garages, but not enough, and preferred parking. And so now then you try to, get everybody to re-sign and then start squeezing on the extras. And again, that one I volunteered because I like helping. So I volunteered and I actually researched. It should have been a smart apartment. It's an A+ property, and it should have been built as a smart apartment, and it wasn't. And so researched a bunch of smart apartment options. They ended up picking someone else that I didn't get to my final list for them. But again, I drove up to their location, met the contractors, got bids, made recommendations. And next month, they're actually going to launch it, and I'm going to help them. And this is all, I call it the earn and learn model. Again, not every GP will let you do things, but they did let me.
Okay. Did you like that?
The opposite of my place. When I go to that apartment, I want to move in. The first one was I worried about my car. It's a A+ property. Just to give you an idea. Okay, this was 176 doors, $10 million. The one that I was talking about before, like $60,000 a door kind of a place. This was a 300 unit for $60 million. So it was really nice property.
What's the usual split per person here? Would you happen to know that?
So every deal is different. So you got to really understand what are the metrics of the deal, what's being offered, what are the splits, are you getting earnings or are you getting return of your capital? You really, there's a book by James Kamasami called Passive Investing. Read it. I read it all the time, recommend it. Anybody who's been on this call that's been with me, I've sent you it. It's an awesome book. I'll put it in the chat actually, and I'll put a link where you can get it for free. It's a really good book about
thank you.
passive investing.
What was the author's name?
James Kamasami. And I'm actually now in his mentoring program. It's quite a bit better. And it's an awesome book.
Cool. Well, thank you. Appreciate that.
Yeah. And it talks all about what you should look at. And in fact, I'll plug, connect with me on LinkedIn or whatever, but next Thursday night, so it won't compete with Pat Meetup, so we won't take his clients away or we're presenting what not to do as a passive investor, and James is actually presenting. I do a meetup with him now once a month, and
Awesome.
very, very, very good book. And just to give you, I don't know what he just did a webinar last night talking about raising money. I think his raise was 10 million, and he did the webinar at 7 last night, and at 5 this afternoon, I got a sorry, it's sold out email.
Really? Wow.
That's where I want to be.
Yeah. Yeah. You got that right. That's awesome.
Yeah.
Anybody else got any questions?
Somebody's got to have some questions.
You got to have questions.
Jennifer's always got questions.
Yeah.
I got a question.
Yeah. Hey, Michael.
Hey, this is Michael. I'm out in San Francisco. I'm realizing education and becoming competent in things is really, really critical, right? So for someone who's kind of just starting out, what would be the top 3 or 4 things or courses or certifications or educational items that I should get my head around?
Yeah, so definitely the book that I sent you the link. And then if you want to get active, the next book I recommend is Joe Fairless, Best Ever Apartment Syndicating. A great book if you talk about the mechanics of you actually, James's book is about being a passive, but good to read as an active because you learn a lot. And then Joe Fairless, Best Ever, kind of the best summary of what to do once you switch to the active side. And I actually try to listen to both at least twice a year just to remind myself what I forget.
Well, things change, right? Different things to do.
Change. And so talking about the splits, right? Every deal is different, and you got to be careful, right? Because sometimes it's misleading. Oh, it's this split, or it's this pref, or it's that. So you really want to make sure that you understand what the real parameters of a deal are. So my kind of basic parameters right now is I don't want anything that's bigger than a 70-30 split, at least on the main split. I don't mind if after you make some money, it goes to a different, I'll talk a little bit about that. But most of the deals I've invested in are what I'm going to call an 80-20 split. So where the general partner team takes the 20 and the passive investors take the 80. And then normally there's a pref in there. And I want to make sure you understand what the pref is, that you get a payment first. So you get paid 7%, let's say the pref is, before the general partners take any of their money. So if the deal only makes 7%, the general partners don't make any money. So they're incentivized to make you more than that so that they get paid as well. So that's very important. Try to realign your interests. But there's a lot of sneaky things going on. Okay. So what will happen is they'll say, oh, we got a new build or we got a deep value add, but you're going to go cash on cash day one. You know what that means? They over-raised and they're giving you back your money. That's what that means. They've over-raised and they're giving you back your money. I mean, it's crazy. Like there's some deals out there right now that they're doing and they're saying, this is a new build and you're getting cash flow from day one. Well, how are they getting cash flow on a new build? There's no cash coming in because they haven't built it yet. So they're taking your money and then giving it back to you to make you feel comfortable in their investment deal. Also, the split can change based on what happens. So I just invested in a deal, my first mini storage investment. And if they double my money, the split goes to 50-50. And I'm like, please double my money. Please double my money. I'm okay, right? Because again, you put your money in, and if they double your money, I'm okay with it going to a 50-50 split because they doubled my money. Big difference, right? So, you know, they always talk about the multiplier of your money, right? It's a 1.6, 1.8. You just got to be careful when you're looking at numbers and understand what exactly they mean. And also make sure that you understand, are you getting a return on your investment or a return of your investment? Those are the lines that can get blurred by people. So you want to make sure that you're getting a return on your investment. Plus, of course, you get the return of your investment at some sort of a refi, a sale, or, you know, a portion thereof done in between. You want to make sure that you understand that, because you want returns on your investment. You want your money to continue to grow. Unless there's an event where they give you a portion of your money back, right? And the event is normally, you know, refi or some other event that happens, or of course the sale.
Now, where would that language be? Would that be in the PPM?
All in the PPM, and it's kind of buried. So, you know, when you're falling asleep reading that 100-page PPM, those are a couple areas to really pay attention to, you know, what the exact wording of what they're going to be doing for you. Because again, you want return on your capital, right? You want your money to make money. That's why you're passively investing.
What's the PPM stand for?
Private placement memorandum. Yeah, so that's a good thing. So when you get involved in a syndication, normally what happens is there's a webinar of some sort of nature and you watch the webinar. Then they give you a link and you go to a link and you fill out who you are and they make sure that you're right. So there's two types of syndication. So 506B can go to unaccredited investors and accredited investors. 506C only goes to accredited investors. So you kind of figure out which one is it. And then there's this thing called the private placement memorandum. And it spells out everything in excruciating detail about how they can lose your money, what can happen, all of the, like, if you really believed it, you would never sign it and do it. So there's a little bit of faith in there, but you want to make sure you at least understand every deal has risk, right? You know, my first two deals, like I said, did not make money. I understand. I'm a big boy. Investing is risky, and real estate is normally very good. You know, I got unfortunate, and the other deals I'm having in are going very well. But you want to make sure you understand how they're paying you, and then what happens to their splits when events happen or when milestones. And again, I'm not afraid that this deal goes to a 50-50 split if they double my money. Because again, double your money is a really good thing. Now, double your money in 10 years isn't a good thing. This is a new build, and their goal was to try to double your money. And you know, they were going to build it, stabilize it, and then finance it again. And that's when they would be able to give you back, you know, at least your principal, and you would still own some portion of the deal.
Okay. Yusuf, you have your hand up?
Yeah.
I see it, Denise. Go ahead.
As someone who's, you know, you're starting to get more experience and doing more investments, how did you scale your leads with specifically multifamily? Like, how were you able to scale them so as time went on, it was less difficult for you to find leads?
You know, so I guess education was the biggest thing, you know, really understanding what am I looking at, what am I reading. But as I've gotten more into my investments, I'm investing for a different reason. Now I'm investing with people that I want to partner with, right? Because I'm switching now to active. So, my last 4 investments have been, out of my last 5, 4 of them have been with one particular syndicator, and we've been putting LOIs out together. There hasn't been room for me on his deals, but I want to stay close in his world. And so I've been investing in his deals, and then also offering to help or do whatever I can and stay in contact with him. So I've been what I'm going to call relationship investing, and it's not always an option to do that, but when you reach a certain level, when you want to switch gears and go to active, so the deal I mentioned last night that he raised his money so quickly, even though I'm part of his educational program, and I hope someday I'll do a deal with the students and he'll be a sponsor, he doesn't take partners. So for me to invest in his deal doesn't buy me any more closeness to him. Oddly enough, he's a sole GP on 2,800 doors, if you can imagine.
Wow.
And completely vertically integrated with his own management and construction company.
That's
So
wild. So
very
he
rare.
doesn't have students partnering in his deals and stuff. He's done it all himself.
Yeah.
Wow, I didn't know that.
Yeah.
Interesting.
Yeah. And he did start single family home, and his first apartment complex he bought was like 40 something units. It's an amazing story.
That's wild.
Yeah. Very rare. Very
Yeah,
rare.
I was just gonna say,
Most
yeah,
people are
that's
partners.
yeah.
And I think there are huge advantages to partners. We all think, oh, that sounds really, but there are huge advantages to being partners with people. I have weaknesses, even though you look at me and you think I'm so amazing, I have no weaknesses. I really do. Oh, we missed Denise's question too, so we got to get back to that. But find people that fill your voids
Mhm. Definitely.
and partner with them.
Go ahead, Denise. Unmute yourself and ask away.
Hi, I'm Denise. This is my first time joining this Zoom, so thanks for having this. I'm really excited. So I am actually a capital raiser. So I look to find investors for properties that my deal has underwritten and done the deal sourcing and all that good stuff. So how I typically find my investors is I do everything online. So I message on LinkedIn, Facebook, everything like that. Is there anything that you can give me advice of kind of making sure that I'm like relating to investors, making sure that I'm getting their attention? It's not just it doesn't look like just another scam on their inbox. Thanks.
Yeah. So from what I've learned, the most important component is that you're providing some level of education. I mean, you're providing some format. I mean, that's why Pat's doing this. Pat's not doing this meetup because he has nothing else to do on Wednesday nights. I know he's a busy man because we've known each other for a couple of years now. So providing platforms for education, for people to connect, to learn, that's really important for you to get the confidence of the people that you're going to take the money from. And it's all, again, this is very relationship, built. So you're a little bit different, that you have to know your jockey really well. And you have to really understand what they want to do. And then you want to find investors that are aligned with what they want to do. And one other thing we didn't talk a lot about is all investments are different. So I'm invested in a new build apartment complex. You give them their money and nothing happens. They do land entitlements. So they finally got out of the ground, which is exciting. There's no cash flow, there's no anything. And then it reaches what I'm going to call the point where they decide when they're going to sell it. Very much like the other deal that I got on, I talked about earlier, we bought it from somebody who did that. And so you have to understand what your investments are going to give you based on what you need. So if you had somebody who needed cash flow and you put them in that deal, you did them a big disservice, right? Even though at the end of the day, they may make more money. They don't have food today because they needed the income or whatever it is, or they can't meet their bills. So you really need to make sure you understand what are your deals doing, right? A lot of value add deals, even with 7 pref deals, they'll be, if you'll know, if they're honest with you, that maybe you're not going to get your full 7% caught up till the 18th month by the time they stabilize the property, get the cash flow going. So you need to really make sure that you're educating people so they really understand what they're putting their money in. I'll be honest, the first deal I did a pref, and then I got a $200 check, and I went, or a deposit in my bank, and I went, oh, wait a minute, I'm supposed to be getting a 7 pref. So I learned that really quickly, and now I pay a lot more attention because it was a value add deal. And the deal's almost a year now. Our call's next week, and I'm hoping they're going to announce that we're getting close to start doing some catch up on the pref payment. If that does anyone understand? That's a little confusing, but they promise they'll pay you 7% first, but they only pay you 7% first when the cash is there. And so it takes them a little while to get the cash there. So it keeps accruing until they can get caught up.
I have a follow-up question. How many years do you typically like to hold your properties?
So again, I like it to be mixed up. I'm okay anywhere from 3 to 7 years, depending on the deal. So if it's a high cash flowing deal with producing income and a decent upside, I'm okay to sit on it for 7 years, but I don't want to wait like 4 years to get paid and then another. So every deal is a little bit different on how it does it. So I'm in two land deals. One of them is a little bit different. I'm more like a bank. The other one, basically the idea is you give them your money. It's supposed to, be about a 1.6 multiplier in 18 months. Now, if it takes them 24 months, and they get the land ready to go, and then they sell it to the next phase, which is the build it up phase. And then what often happens is the build it up phase sells to the run it phase. So sometimes land deals can take 3 moves, but you want to be careful if you like that. So the one deal I'm in, I have the right of refusal to go to phase 2, and then the first right of refusal to give. So I got lucky. I'm partnered with a guy invested in 10 acres behind Tesla. And then Tesla, after they got everything done, announced they're moving head office there. And we went, oh, this is my friend that I've been doing some deals with. We can now build a little nicer apartments, maybe. So now they commissioned a study to say, okay, instead of 200 2-story garden style apartments, can we do 5-story, A minus B plus with elevators and garages with Tesla chargers in them, because it's a different level of people moving here now.
Wow. Interesting. Jay, you have a question? Thank you, Denise.
Yeah, what characteristics do you look for in people that you're confident in investing in with?
Honesty, and that's a hard thing to measure. So you got to watch over time, but I want people to tell you the good and the bad. And if any of you guys are aspiring spot, tell people the good and the bad. If everything is always only the good, there's a lot of people that look really good on the internet. They never make a mistake. They never do anything. And I don't care who you are, something goes wrong on everything. There's always challenges. And so I like it when people talk about their challenges. And I a lot of the people that I've invested with, I went to, they had meetups like Pat, or there's a couple of guys they did. I'm fascinated with asset management training. So I don't know if you guys know Gary Lipsky and Kyle Mitchell. They did some asset management training, and I was fascinated. And then I got in a deal with them, and they had a quarter that they said, well, we're really disappointed, and we want to tell you we didn't get to here, and this is what happened, and here's what we've done to get there. And I loved it. That's okay.
Anything else, Jay?
No, sorry.
That's okay. No problem.
Come on, Jennifer. You've always got questions.
I know. Sorry. No, you answered it so well. That was it. Thank you.
That's good. That's good. I have a question.
She asked me, I think, a question a day for a while there.
Thank you.
putting her on the spot.
It's okay. So you have different investments, let's say multifamily, self-storage,
Yeah.
land. How do you, as a passive, I know how we do it is like apartments, we have an analyzer, get it. How do you like land? What do you look for to say,
Yeah.
okay, this, I'm going to give you $50,000. What's my thing? You've never developed land. Let's say you never did it at that point. How do
Yeah.
you do that compared to an apartment?
Yeah, so the first land one I did was very easy. I was actually trying to buy an apartment. I sold a bunch of stocks and the deal fell through. And I got an email from somebody I'd already done a non-real estate investment with saying, we're buying this land. We need basically they needed hard money loans and we're going to pay you 16% on your money. Are you interested? And I went, sitting in the bank account doing nothing, don't have a new deal. I'm interested. So that one was easy because that was just basically, I was guaranteed by so I was basically a lender on that particular one. The other land deal, it took me a little bit longer to understand it, how it all works and to make sure that, but basically that one, I had to trust the math of the people that were involved. And I got to know all of the partners and talk to the partners about some other deals they had done. And they actually had done mostly rural deals that turned into subdivisions. This was the first one that was going to turn into an apartment. But again, 10 acres, 5 minutes from a Tesla factory. And anyone who knows anything about Austin, Tesla factory was built in the middle of nowhere, very close to everywhere. So there's not much housing around it. So to me, this was kind of an easy thing. But if we were talking about land up over somewhere, I would not invest in it because I wouldn't understand enough about it. So those two made it easy to invest in it. So I've not looked at anything else to invest in. Storage, I was a little bit interested and I started looking at storage. And then again, things aligned. The person was doing the capital raising that I wanted to be involved with. I've been trying to get on a deal with her kind of deal. I like the deal. That was the one when they double my money, it switches. And it's in Charlotte where my brother lives. So now I can have a business trip. So strange, that shouldn't really apply in there, and I know Charlotte's such a hot market and a lot of people are moving there and a lot of people got a lot of junk. And so I said, okay, I'm gonna invest in a new build first. And then maybe at some point I'll build on one of these repositioned ones where they buy them from mom and pa's and automate them. And I have someone who's doing one here in Austin and been paying attention to it just to see what I can understand.
So that self-storage one, you've never done as self-storage. So you went in with the private lender, or should say the capital raiser that you wanted to. So you had your in there, but then you had to rely on the partners and stuff and your understanding of, let's say, the math, right? And kind of say, okay, does this make sense? Because obviously there's a lot of different things, demographics and traffic flows and all that. That's a little bit different in the self-storage than it is multifamily. So you kind of had to get up to speed fairly quickly on that.
Yeah, and I had been studying it because I was getting frustrated with multifamily. So I've been studying storage, trying not to get distracted while being distracted, if you could, because I was
I do
getting
that all the
frustrated.
time.
I mean, I put deals out, all the offers out, and I'm not winning any apartment deals. And I'm like, okay, maybe I should be switching gears and go after something. I still haven't looked at the mobile home parks yet, even though to me, even though, they're great and a lot of people do really well on them, I don't want to chase that end of the market. I'm okay chasing people's junk to put in a garage, but I'm not sure I want to be the landowner of a mobile home at this point. But so I'd already spent a bit of energy looking at it, connected with some people that are very active in the space. Masha, the Russian girl, I try to go to her webinars and listen to what they do. And there's this other guy, Pal Chi in California, and I connected with one of his partners, and I go to their webinars and listen and read through their PPMs, but didn't pull the trigger. So I wasn't completely blind, but definitely risky with me being my first one.
Mhm. But it sounds like you've educated yourself enough, like you said, go to these webinars
Yeah.
when they're talking about the numbers, talking about and what makes sense to you and what doesn't. That's good.
Yes.
Okay.
Yeah.
Yusuf, you had another question, sir. Go ahead.
Yep, it's kind of a two-parted question.
No problem.
First, would you consider or have you invested in properties outside of your main market, like maybe another state?
So I have one investment in Tucson, Arizona, and that was after I went to their asset management training and they had a offering. I decided to kind of go to the next level. And then this storage unit is in Charlotte, North Carolina. And I know that market just because my brother lives there. And I know how fast it's growing and it's a nice market. But everything else is in Texas.
Okay. And if someone were to come and, bring you a deal, looking to bring you in as a partner, what in a place in a market that maybe you're not familiar with, how would you want them or expect them to propose the deal to you?
Yeah, so that's a good question. So what I bring in value to a deal. So I want to make sure, so I'm unproven as a capital raiser. Been trying to prove myself as a capital raiser, and hats off to those that do it successfully. A little harder than I thought. So I'm not a big capital, but again, once I get my first deal and I get going, I think I'll definitely catch momentum. And I've even had to turn down offers to be a GP that came with the caveat, you got to guarantee you can bring $1 million to the table. And I just didn't feel comfortable. And then my next value that I offer a group is my asset management. And right now, again, I did one on a property. I was an LP. I am a GP on a property closing the end of this month, and I am going to be the asset manager for that. And once I feel a little bit better after touching and feeling and doing and actually getting my first deal where I am responsible for everything that happens, I'll feel more comfortable doing it remotely or doing it to a place I can easily get to after I've done it at a place, really easy. I mean, it's 2 hours away. And so right now at the beginning, I plan to go once or twice a week at the beginning, really hone my skills to make sure that I don't disappoint people, that I can't do a good job being the asset manager. Because that's, other than a lot of other, knowledge, that's the main skill that I bring to the table.
Okay, appreciate it. Thank you.
No, great questions.
Yeah,
Great
and you want to
questions.
make sure that you know your skill, right? Know your superpowers. My superpowers are connecting people, and I love running businesses, and I get excited by strange things. I mean, my whole life has been incremental improvement businesses, and that's all any real estate investment is, right? Buy it, do a better job running it, maintaining it, fixing it up, and getting it, making sure you have good, happy tenants. I take it to the next level. A lot of people don't add good, happy team working there. I think if you don't have a very happy management team working it, you can't be as successful as you want to be. I don't like it when I get into deals and it's adversarial between our property manager and sometimes they don't perform, but I want to try to get that, and all of that works out to be good for investors.
That's awesome. Jay, go ahead, sir.
What comprises asset management?
Yeah, so asset management is really the person that's responsible to deliver the business plan. So they manage the property manager and everything that you need to do to successfully implement your plan. So implementing your plan is, smooth takeover. And then takeover, we say we're going to renovate this many units for this much money, and we're going to increase the rent by this much. So making sure that all of those things happen, right? Getting things renovated to the right level. You don't want to over renovate for a market and, put in granite countertops and stainless steel appliances and workforce living, right? Makes no sense. So make sure the balance is there. And then they're the person that drives it. So every day you're renovating the apartment, you're not collecting rent. So, the making sure you've got a nice momentum of all of those things, managing things like, are we maxing out the rents? Are we pushing the rents? how quickly do maintenance orders get fixed? And you can see a lot of these things through management reports. This many maintenance tickets came in, this many were done. And then, you know, and actually my role at the beginning is to spot check those things so that somebody knows that we're paying attention to it.
Okay. And you're also a GP in that
That's
sense.
correct.
Okay. Okay. Got it.
Yeah. And that's very common, right? So there's usually, usually big portion of the GP, everybody kind of has a different role. But there are asset management is one of the, that's basically what happens after the deal, right? Who manages the business performance.
What are all those roles in addition to LPs and
so they have all different, like everything from dealing with banks, dealing with insurance companies, dealing with major vendors, dealing with the investors is a huge role. Making sure that investor reports get done, investors get answered questions on. So there's a variety of roles. Making sure that the distributions happen on time, dealing with the accountants and to make sure that the K1s get issued at the end of the year. Everything, so someone might say, okay, I'm going to take care of the cost segregation thing. Well, that's a big job. And, you got to get somebody smart like Mark on your team, and somebody on the team has to make sure that it all happens. And then that information gets over to the accountants, and then that information gets put into, so it all flows through. So different members in the team have different skill sets that help do that.
Okay. And you were talking as a deal wide role.
Deal wide, correct.
Deal wide. Okay.
Yeah, there's a lot of work. A lot of the gurus tell you you're going to be a GP and you sit on the beach drinking pina coladas and the checks roll in. They're misleading you, my friends. These are real businesses. Now, are they successful businesses? Yes, but they're businesses. You need to run them. You need to pay attention to them. You've taken people's money. People have worked long and hard to earn their $50,000 to give you, or 75 or 100. That is sometimes their life savings. And when you go to a GP, that should keep you up at night, that you want to make sure that you give them a good return on their money.
It's funny that you make the analogy between this and a racehorse, for example, because in that analogy, we are actually the gamblers, right? So we're putting our money, again, it's the same thing. It's a risk. And if you know the horse, if you know the jockey, then it's an educated risk, but nonetheless.
Yeah. But it's definitely a team sport. And you connect with people. I connected with Pat, and we've looked at a few deals together, and I want to do a deal with Pat because we have complementary skill sets. And that's how, we connected almost 2 years ago now.
Yeah.
And we were underwriting some deals pretty quickly, and then it slowed down a bit. And then, Pat had a deal that popped up in Texas and reached out to me for a little bit to look at. But you want to connect with people now that later that you could pick up the phone and say, hey, I need you. Are you interested?
Definitely. John, you had your hand raised. Go right ahead, sir.
Yes, sir. Thank you. I was just asking, for those who are just starting out, sounds like a lot of us are, what are some things that we can add value to someone that we want to speak with or connect with?
Yeah.
Or is it just financial? Is financial the only thing, or is there other ways?
So financial is a big thing because everybody's chasing money in this thing, right? It takes a lot of money to buy things, but there are other skill sets. Okay. So the deal that I'm on, I got on that deal by every single thing I do. I say, I'm in Texas. I will go take a look at your property. I will do some due diligence for you. No strings attached. And, this deal, to be honest, so what happened was I gave them some information. I went and visited the property, and then I saw they bought it, and they never talked to me. And I was like, oh, this is so sad. I'm so disappointed. So I wrote an email, said, congratulations on getting the deal. Just want to remind you that I'm still here if you need anything. And they did. So it worked. And then develop a skill that you can bring to the table, right? So if you're in a market that people want to invest in, like Texas, really understand, like I understand the corridor, man, I've looked at probably 300 apartments in 3 years in this corridor. You know, doing due diligence, taking photos, doing my list, looking at comps. But I don't underwrite very well. And that's how I connected in with Pat. Pat was much better at underwriting, and we had another guy in our team, and I need that skill set. So that was something I needed and looked for in a partner. You know, and then if I don't know what your background is, but if you understand accounting, you know, or if you understand legal, just try to hone something that's going to be valuable.
Thank you.
Yeah, and if you live in a place that people want to be, make sure you know as much about that place, right? Know about the neighborhoods, crime statistics. Is it good? What are the school districts like? You know, all of those things add up to somebody's going to need that someday.
Right.
Yeah, be the boots on the ground and have that local knowledge where somebody can say, hey, I know John, he's in XYZ state. You know, what's the path of progress in this state, John? Where is it? You can say that like that. That gives people comfort to say, okay, yeah, let's bring John on the team because he's there, right?
Right. Okay.
Yeah, and just do a lot of like watch videos on how to do due diligence or whatever, and figure out how to analyze an apartment complex, right? Look, you know, it's you got to make sure you know what you're looking for, right? So, you know, depending on the age of the property, you're looking at roofs, you're looking at driveways, you're looking at windows, you're looking at air conditioner units, you're looking at foundations, you're looking at, you know, I was on a deal that I ended up having to get off. It was $38,000 to trim the trees, you know, but when I went to the property, I went, man, there's a lot of trees, and if we get a windstorm, they're going to blast through all the roofs, and that needs to get on our budget. We were a little shocked that we got free mulch for about 3 years after trimming all the trees, but
So now, when anybody else got a question? I don't mean to dominate here. I know it's 8:07 here, so I want to respect your time, Trevor. Anybody have any other questions? Oh, go ahead, Jay.
Yeah, so about networking, how did you get yourself in that position outside of just joining that group? Is there more of an organic opportunity there?
it's calls like this, being on call. So I am on, when I'm done this and hang up the phone, I'm going to another meetup that starts in 20 minutes or so. And I reach out to people on that meetup. I am on at 1 to 2 meetups every single night. I pick up one. There's a group in California that does one on Saturdays. I get on their group just because there's some people I wanted to connect with there. In my market here, I go to every in-person meetup. I live in Austin. I go to a meetup at least once a quarter in Dallas, San Antonio, and Houston, and try to gauge around and find the best meetups. And then sometimes I'll go to this person's meetup, and then next quarter I'll go to another person's meetup. And then sometimes Dallas, there was 2 meetups that I wanted to go to back to back, one on a Tuesday night, one on a Wednesday night. So I filled my Wednesday with appointments of people I'd met in Dallas, you know, to make sure that I was productive.
Okay, awesome, thank you.
And I'm fortunate that right now I can do that because I don't have a W-2.
Yeah. I mean, some people do, and that you can still do it as a business, right? You just have to, again, plan, right? It's the project management part of it. Okay, I'm going to go here Monday night, Tuesday night here, but COVID has kind of hurt or also kind of made it easier to connect like we're doing now, right? I mean, this used to be an on-site at Schoolcraft College, right? People were having trouble getting there. They get this, so now I did it online where all of a sudden now everybody's online because it's so much easier. You can sit at home and do it, right? And go from there. So great question, Jay. Anybody else got any questions?
And just in the last year, I've been to 3 in-person meetups in the state of Florida. Long way to go, not cheap to get there. But again, one of them had 300 people and the other 2 one had 800 and the other had 600.
Wow.
So one more question here. There's an asset manager and there's a property manager. Have you ever seen a property manager be a GP as well? Is that even an
So
opportunity for someone?
normally the property manager is a third party manager. So
Okay.
the banks want you to have a third party qualified person
Oh,
to manage your property. So normally the property manager is a third party that you hire.
Okay.
And then, like I talked about with James, the guy before, he got his own license and did everything, and he became his own property management company. But
Yeah.
within that company, he has somebody who runs the company, somebody who's
Yeah.
a regional manager.
Okay.
So
Yeah.
you do it that way.
Got it. All right. Thank you.
Yeah, you want to be good at managing the manager,
Yeah.
right? And having your KPIs so you can manage that person. And the same thing if it's integrated, if it's your own company, obviously you'd be managing somebody else who's a manager on that side, because there's a lot to do, as you can see, even on an LP side or GP side, a lot of stuff to do.
Mm-hmm.
Great questions. Awesome. Anybody else got any other questions?
But never stop learning.
Yeah.
Never stop learning. Be hungry to learn.
Yeah, definitely. And I would say one thing is go on meetup.com and kind of search everything in there and just kind of that, or you go to Facebook and search, real estate groups, multifamily groups, self-storage group, whatever you're looking to do. Same thing with LinkedIn. They're just big databases, right? And see and join and click and say, hey, I see that you're a self-storage, you have self-storage, and just, what can I do for it? What can I learn from you? And that's how you do it. I mean, that's how I fell into a few groups that I'm in. The same thing is, and if you notice, Trevor also is very strategic in, if you see how he talks as far as, okay, I want to go to this group because I wanted to meet this one person, or I wanted to get and talk with this one person. When you meet him on their level, right, or her level, you get that camaraderie. They're going to see you there and see you at these different groups. Then all of a sudden, hey, well, you know what, let's do a deal, or you're in Austin and this and that, and that's really how it happens. It really does. It's it's just really a bit, it's a big network, but it's a small network, and you get to know the people who perform and who don't, and who you'd love to partner with, and who okay, yeah, someday maybe, and stuff like that. So,
and that last long rambling link that I just put in the chat, that's for the meetup next Thursday. If you're interested to learn more about passive investing, James, who's again one of my mentors, he'll be actually presenting, and he was the author of that book that I put the link in at the beginning.
Cool, thank you. Awesome. Okay, well, you know what? I know you've got another. Go ahead.
Yeah.
One question, Trevor. Do you have any meetups over here? And I'm in the Dallas area. Do you have anybody that you recommend?
Oh, you missed it last night. Last night there's a great meetup.
I missed it.
Yeah. So I put my contact in there. Just reach out, send me an email, say, listen, I'm in the Dallas area. But there's definitely a couple of really good meetups. There's one that meets at a sushi place. I think it's like the second Tuesday. I went before Christmas, the first time I went there. A lot of really good people there. And then Hayden and his partner, they do different meetups. Yeah, so I can definitely hook you up with a bunch of different things in Dallas that are really good to do.
Awesome.
Kenny Wolf has one this Saturday, Wolf Investments, and he's actually doing a tour of a property he just took over, and a meetup. Kenny Wolf he's a very interesting syndicator. He does very unique deals, like turning a post office into multifamily and an office building in downtown Cleveland, and actually won an award for it. Very, very clever young man.
Are they the ones that are doing the due diligence this weekend?
That's it. Yeah.
Okay.
Yeah, and he invites people to come out, and he has a meet. There's another, Aaron Katz has meetups in Dallas, so I can connect you there.
Awesome, thank you.
And in fact, the meetup I'm going to here after the Dallas, it's a Texas-wide online meetup.
Oh.
See if I can
You
find
wouldn't.
I think we should move to Texas, everybody. That seems like
Yes.
there's a lot of stuff going on in Texas. My God.
Got a lot of stuff going on. Boy, I
Yeah, if
don't
you have any
the-
information on that meetup after this call, it'd be great.
Let me just get it here.
That's
Anyone
awesome.
else have any other questions?
Yeah, any other questions, guys or gals? All right, while he's looking for that, let me show you how to take down the chat. So what I'm going to show you is I'm going to show you how to save the chat out. So what you do is you click on the chat in the middle of the screen. It'll pop up on your right side of your screen. And then where you type in, it says to everybody, and then there's that piece of paper and that smiley face. There's those 3 dots right there. Click on those dots. And then the top thing is save chat. Okay, so what that does, that saves that whole chat. Click on save chat. And what you do is what I do is I click show on folder. So it opens up another window, and it's on my other screen. I have 2 screens, and that's where it's saved at. Okay, it is meeting _saved _chat, and that's what it is. It'd be a text document, and you can rename it and then take it into whatever program you want to do that. Now, in any Zoom meeting, you can do that, and unless they have the chat disabled. But what I do with that is I open it up, I put the date, stuff like that, and I save them off. Then I go back in and put them in an Excel spreadsheet, because typically they have their email address, their name, how to get a contact. So I just put that in an Excel spreadsheet. That way I don't have to worry about, not, copying the guy's name, or, like Trevor just put in that long Facebook URL. I'd never remember that, right? So hopefully that'll help.
That's for the next meeting.
Awesome. Well, thank you very much. Well, Trevor, you outperformed, and this has been awesome. I appreciate you coming on, and I learned a lot more about you than I didn't know, which is always good. I appreciate your time, and thank you very much.
My pleasure. I was doing a big thing in December saying I was the most interesting man in the world. So I was posting things like I had lunch with Michael Jackson, met Robert Downey Jr., flew in the wind tunnel right as Iron Man was going. And some of my best friends did all the skydiving stunts in their Iron Man movie.
Oh, awesome. I saw those posts. I'm like, man, you're famous, man. You're famous.
Well, my friends are famous. I'm not.
Oh, okay. I got him in when he isn't charging an appearance fee, folks. So just remember this now. When he goes big time, we've got this recorded. So, but no, I appreciate it. Thank you very much for your knowledge and your wisdom, as well as we are recording this. This will be on my YouTube channel here probably this weekend. So if you want to see it again, stop it and replay it, this and that, it'll be on there. Definitely reach out to Trevor, and I appreciate it again very much for you coming on and sharing your knowledge. I hope everybody tonight learned at least 1 or 2 little nuggets. I know I've taken some notes over here, even though I can ping Trevor anytime I want to. You still hear things, but definitely do that. Look for the video to come out, as well as if you're looking at wanting to partner, you can call Trevor, you can call us. My website is above me here. We're looking into partnering with people too as well in deals. We do invest outside of the Michigan area, as well as in Michigan. And again, we do due diligence, just like Trevor. We do our due diligence. I am boots on the ground here in Michigan as well. So, but listen, thank you very much for your time tonight, ladies and gentlemen. I appreciate it. Come back next month, same time, same bat channel. And Trevor, thank you very much, and very grateful for having. I did too. I had a great time. And with that, I'll let you go, because I know you got another meetup coming up. I'll let you go to take care of an adult beverage maybe, and get on to the next one there, right?
Awesome. Well, nice to see you, everybody. Thanks for coming
guys
out.
and gals.
All right. Have a great night. Thanks.
Bye-bye now.
Guys.
Thanks, Pat. Yep.
Thank you.